Well, hello everyone. Good morning. And first of all, I'd like to say Happy New Year to you all. Prayerfully, you all had a blessed and safe beginning of the new year. And I pray that you all have a blessed and safe rest of the year of 2024. Hopefully, this is a very prosperous one for you all. And with that said, I wanted to do a very quick early morning futures review to show you guys what the markets, how the market is starting to set up as we approach another year and as we approach the beginning of another trading week. It is now approximately about 1:45 on the East Coast time in the AM, and today is January the 2nd, 2024. Was up early this morning and thought I'd take a look at the futures market and see how things are starting to set up as we begin another year and begin another month. And this is what I see. I'm going to take a look at the weekly charts, only just because we are at the beginning of a new week, beginning of a new month, and beginning of a new year. So I want to see what the bigger, broader picture looks like as we approach this new year. So what I want to point out right away is that I'm looking at the futures market for the Dow Jones. I want to highlight some areas that we have succeeded within Dow Jones futures. And again, normally what you see in futures normally translate over to the cash market as well, overall market when the market opens. See this area that I highlighted, areas where we have seen it in the past some resistance levels. And if you see, look to the right, we have broken out of that level on the Dow Jones futures. So the Dow has actually broken out of previous resistance levels, broken above all-time highs. And look where we're at now, just above that. So I would not surprise me to see some type of consolidation, even a pullback to the areas where we broke out above. And if you look at the RSI and overbought territory on a weekly chart. So if you know we're in overbought territory on a weekly chart, you know that the daily chart definitely has some overbought territory in order to possibly pull back and consolidate. So would not surprise me as we go through the month of January to see some type of consolidation or even a pullback to certain levels. All right, that's what the Dow Jones weekly futures chart looks like. Now let's take a look at the S&P. So again, we definitely at above levels of previous resistance. Previous resistance now becomes support again. So that means it would not surprise me to see some type of check back to that support level as we travel through the month of January. All right, let's take a look at it. Future chart for S&P E-minis. All right, here we go. S&P is hovering around all-time highs. So the S&P futures hovering around all-time highs. Okay, as you can see, we're hovering around all-time highs, right at that level. So so we're still at a resistance pretty much. We haven't really broken it yet. Haven't really broken it in a major way. So we're hitting that resistance level while price action is showing overbought in the RSI. So again, would not surprise me to see some consolidation, possibly a move up, a strong move up, push up, break out of this level and break above resistance. But if not, we can see a pullback at least to the 20-pip moving average, at least to that, if we start to pull back as we start this trading week. We're right at a level of resistance, so normally you'll start to see some consolidation once you hit resistance, some consolidation, or even a slight pullback. So pay very close attention that we could start to stall here if we don't break out above that resistance level right away. So again, we're right at a conjunction point, right at a level of resistance. So anything can happen at resistance with overbought territory showing. So we definitely could see some type of consolidation or pullback right where we're at now. That is the S&P futures. All right. Let's take a look at the NASDAQ futures. Again, weekly chart definitely showing right at a level of resistance. So we've seen a struggle here before. In the past, around October 2021 or beginning of 2022, we struggled up here and then we eventually pulled back. So where we at now? Right at that level again, with the 20 per movement average still on the ascension, so we're still climbing on the 20 per movement average. So again, we're not surprised when we see some type of consolidation. As you see, we're starting to consolidate now, so we're not be surprised to see some type of consolidation here, or even a pullback, at least to the 20 per movement average. I say at least because nobody knows what can happen if we do start to pull back here. But so I do expect some type of consolidation or pullback here. Again, NASDAQ also, look at RSI, it's in oversold, overbought territory. I'm sorry. I've been saying overbought territory. Last time we were overbought territory was between April, June, and July. Stayed up there for a second, and you see we eventually pulled back out of the overbought territory. So could we consolidate here and stay up here for a bit? We could, but we got to wait and see how that pans out as we start this week out. So again, we could see some type of consolidation here, or even a pullback to the 20 per movement average, at least as we travel through the month of January. So the month of January, in a nutshell, could be a little bumpy road back and forth. So we have to see how it pans out before we have a strong breakout above this level. We have to see how we start this new year out. So that's a quick glance at the weekly chart of NASDAQ futures. Now let's take a glance at the Russell 2000 futures. This is the one I think I think Russell's possibly setting up for a major breakout, but I don't think it's going to happen before some type of consolidation because of where it sits at now. Out of all the indices, Russell has really not had a huge participation in the 2023. So I think 2024 could be a year that Russell makes an attempt to break out of this range or make an attempt to break above previous levels of resistance to try to make a run towards ultimately sometime this year towards its all-time high. That's a huge possibility, which is what I just circled. That's the ultimate all-time high of Russell. And as you can see, we're way down here. So we got a ways to go and currently already hitting a level of resistance. So let's take a look at that real quick. So as you can see where we're at now, our price action is now right around this 2055 level for the Russell futures. And as you can see in the past, that has been a strong level of resistance before, because we hit the level back here in April of 2022 and we pulled back. And if you look previous on the left-hand side of that, before we even made a run back towards the level, it used to be support in the past. As you can see in the past, in 2021, we've continued to bounce off this level and we was above it. So it was treating it as a level of support in the past. And then we broke below it 2022 and it became a level of resistance. So where do we stand now? We're right back at the level of resistance. And we're starting to see some type of consolidation or even pullback at the level of resistance again. So this is a strong line here. It's a strong level of resistance and support. So normally we hit that strong level because you see it multiple bounces back here when it was support. So it's going to be tough for the Russell to just punch above that without some type of consolidation or even some kind of pullback. So again, we're right here at this level. As you can see, we kind of like stalled there and we're starting to consolidate or even pull back. So this is where we are now. Had the 20 per movement average is still trying to rise. So we could see some type of pullback, at least to that 20 per movement average, or some continuous consolidation around this area here. Okay, so we have to wait and see how that pans out. Not too overbought on the RSI, which leads me to believe that it could punch through there and go higher before a major pullback. We have to wait and see how that pans out. So let's look at the Russell on the weekly chart. Now I want to point out crude oil, because crude oil has been it's been all over the place. But if you look at the weekly chart again, I think I pointed this out a while ago. I said it's still, even with the pullback we've seen in recent, it is still hovering around a level of support. Okay, look at crude. See this big red candle week, which we experienced last week, but it went right up to that 20 per moving average and it hit it and came right back down. So it's having a problem breaking back above that 20 per moving average, but it's not really going to not having a big drop yet. So we could still in this consolidation area, it's still consolidating between 70, a little bit below 70 to 75 area. So waiting to see what happens with crude here. Does crude break below this $70 level in a major way and start to hit below 60 to 65? I don't know, because it's just consolidating here. It's been consolidating below the 20 per moving average for quite some time now, with the RSI looking in oversold territory back in December 2023. And as you can see, the RSI is heading upward. During this consolidation period, RSI is heading upward. So that leads me to believe that we could see the crude oil break out of this consolidation pattern in the near future. So we're watching this RSI on the weekly chart to see if it starts to turn back down, or if it continues to rise. And right now, it is showing that it's trying to continue its rise. So if RSI continues its rise, we can start to see price action start to follow. So pay very close attention to crude oil as we trade in the month of January. If we see a big break above the 20 per moving average and it holds it, then we can start to see a big run in crude. So we have to pay close attention to that. All right, so that's the weekly chart of crude. Let's take a look at the weekly chart of gold. All right, here's gold. I think gold is on a precipice of a major breakout, folks. And here's why I say I think it has the perfect setup, because it already hit resistance, test resistance, broke out above it, and starting to backfill. Look at that. This is precisely what you like to see when you see some type of move up to a level of resistance, a rejection, and then it starts to pull back. And what I think overall markets will see, overall markets are in the process of trying to do, I think gold has already done it. So we made it up to this level around 2100, broke up. And we got rejected there a couple of times in between 2022 to 2023. So in 2022, we hit this level around 2100 and we pulled back. In 2023, we also hit that level, April 2023, and pulled back. We hit it again as we approached towards the end of 2023, and we broke above it in a major way. Got that long wick, and we pulled right back below it. Folks, all that did was like it's setting up a consolidation pattern for a much bigger move. This is a precursor of where gold really wants to do. It wants to really break out above this level in a major way. So when we got that at 2152 and made an immediate pullback below the breakout area, all gold did was consolidate. And look what it did. Not only did it start to consolidate below the 2100 level, it held a strong support on the 20 per moving average. Is what I said. The 20 per moving average can also act as a strong level of support or resistance. Right now, it's acting as a strong level of support. So we got that breakout above 2100. Price action pull right back to the 20 per moving average. Look what it did. It is just consolidating above its 20 per moving average and looks like it's ready for continuation higher. Let's say the 20 per is going to continue to curl upward, possibly act as a level of support and start to see a big bounce off of it, and maybe even a breakout above the 2100 level in a major way. And we get above that 2152, folks, we can start to see gold start to rip, and I mean rip. That's what the weekly chart looks like. Let me show you what the setup on the monthly looks like. Here's a setup on the monthly. Folks, for quite some time now, for the past couple years, gold has been looking for a major breakout. Look back in time. Look back in time. Back around 2019, 2020, gold broke above a major level of resistance, above 1600, and 1600 became a level of strong level of support. And the ultimate high, or the area of resistance, was hovering just around 2100 during that time frame. So from 2020 to 2023, the high has been 2100, where gold has been having problems breaking above. The lowest in that time frame was around 1600. So this pattern here, when gold broke above 1600, we to consolidate between 1600 to 2100. And now what's happening, what you see here during this consolidation time frame, now we see the 20-period moving average broke above this level, and it just pretty much was going sideways until we got to end of 2022. The 20-period movement average is on a steady ascension higher. Okay, see what's happening. When you start to see that 20-period movement average start to ascend higher, normally that is a sign that we are in a nice upward trending channel that is in a process of continuing. So with that said, we made it. We breached above this 2100 level on this monthly chart, and then you can see the 20-period moving average is still continuing to rise. So what I do expect to see gold do is finally break out in a major way. 20-period moving average continue to rise, and we can start to see in 2024 gold really start to break out. Or you can see gold hit 2200, 2400 in no time, sometime in 2024. And look at the RSI on the monthly chart. Nowhere near. Well, it's hovering below the 70 level. And once we break above it, folks, you see what happened in the past. We can see it really, really start to ranch it up, and go deep into overbought territory, which could last a while. So I think gold is on the verge of a major breakout, folks. Just wanted to bring it home and show you guys a setup. So we had that break above 2100, which is a good thing, and then pullback, which is a good, healthy pullback. And now we're starting to consolidate above the 20-period moving average and prepare for a major breakout above that level. That's what gold is showing us. That is in the process of possibly setting up for a major breakout. Let's take a look at silver. Now we're at gold, because wherever gold, silver tends to follow. And I think out of the two, silver probably is really setting up for a major breakout, because it's been really consolidating for a long time. So when silver made it up to its resistance level, you see what happened once we got up to this level. Since 2019, this area here has been a strong level of resistance. Silver has flirted with a breakout above 30 and just hasn't done it. But if we look at the RSI, folks, it's like a spring coil. Look at that, back and forth, back and forth. It has been coiling up, below that 70 level. So when you see a spring coil that's coiling up like that, folks, know that as a sign of a possible major break out in a major way. Look at the TTM squeeze. Look at these, and this is the monthly chart. Look at the TTM squeeze with these dark red dots. That's normally a squeeze setting up for a breakout. And the coiling pattern here shows you that we just been squeezing in between a range. Folks, I sense a major breakout of silver and gold. A major breakout in silver and gold. That's like it's setting up. we've been consolidating for several years now. Like this consolidation pattern is possibly coming to an end, and I think we are about to see a major breakout in silver and gold. So I really wanted to stress that, folks, because now's a good time to position yourself properly in silver and gold for a major breakout. To see if it happens. I'm already positioned with certain ETFs such as GDX, SLV, and probably going to add to those levels this week just to prepare for a longer term breakout. All right, folks. Hopefully this is some information you guys can use. Again, Happy New Year to everyone, and enjoy your week. Enjoy the month of January, and I'll see you guys on the next video.